Hello, everyone. Seth is still on vacation, so I will be here hosting the show. Mo's over here.
This is great.
Nate's on vacation still, too, so everything money's going out of the tubes. So today we're looking at Tata Motors. Now, Tata owns, I can't even say that without, that's a silly name.
Land Rover
and Jaguar.
Yep.
Mo and I both have a Land Rover. I've had 3 or 4 in the last 10 years, and I've been very fortunate to not have many issues because they tend to have reliability problems. Have you had problems with yours?
No problems. My brother's no problems except for the other one. That one doesn't count.
Yeah, it doesn't count.
But we've had 2 new ones, and they work fine.
Yeah, so
I think they get a bad rap going back to the old days.
Well, it's not a bad rap. I think if you look at JD Power and Associates, I think they always have the highest number of issues per 100 vehicles. But either way, we've been very fortunate.
Yeah,
so
you literally have the best mechanic in all of Cleveland.
Well, we do.
True.
Earl over at North Coast Auto. Is that what it is?
North Coast Exotics.
North Coast Exotics.
Funny story. So I went down to North Coast Exotics the other day. Uber driver picked me up because something happened. We're driving there, and he goes, do you mind if I ask you where we're going? Like, are we going to a strip club?
So this guy in Cleveland named Earl, he's incredible. He handles all Italian and British vehicles. That's it. He won't do anything else in this world.
Cleveland Indians, NBA team, NFL
like literally
team,
people from around the country will fly in places when they're going to buy high-end exotic cars. Yeah. So he started this place like 40, 50 years ago. The place is in basically the hood.
Yeah. Yeah.
It's a very, very sketchy area, but then you're like driving, it's very sketchy, and all of a sudden you come onto this like building with just like lines and lines of exotic cars.
Ferraris, Lambos.
I've been there before when he had a $2 million Ferrari in the warehouse, and it's just a ridiculous event. It's amazing, but it's like everybody knows Earl.
Yep.
Everybody knows him who has a nice car because you go to him instead of the dealership.
And
so
he does great work, and he's cheap.
And
go to Earl.
Inexpensive, not cheap.
Inexpensive.
So anyhow, we're going to look at Tata Motors, so let's start with that.
All right.
$13 billion market cap, 10 PE, that's a check. Not surprising, low profit margin, 5.3%. It's an auto manufacturer. They tend to have lower margins. And low return on invested capital and low return on assets. That's kind of poopy. But so far, 1 check, 1 X, no dividend. Income statement. Now, we have to go, since it's international, they only report these annual numbers. 35.64 down to 33.3. That's an X, so their revenue is declining there. Kind of surprised by that. Profit. Okay, so they have a loss in the last year, in the last full year. In the last 12 months, they have a gain. So that does make sense that last year they had a loss for part of it, but they are losing money like crazy right now. Interesting. In the last 3 years, they've lost, what is that, $7.5 billion?
Yeah.
That's a lot of money.
Yes, it is.
Okay. Shares outstanding. Oh, boy.
Yeah, this is where I think it's going to increase. Yeah.
Increasing. That's an X as well. So
Paul,
far, we are not doing well here. We have 1 check.
You call that the silent killer, right?
Yes. Yeah. That is a silent killer, folks. Now, why is it a silent killer? When they're issuing more shares, what they're doing there is they're diluting you as an owner. So let's say the company has 10 shares outstanding right now. You own 1 of them. You own 10% of the business. If they issue 5 more shares, remember, this isn't a stock split. This is issuing shares to get cash to do something with it. Now you own 1 share still, but now there's 15 shares outstanding. Instead of owning 10% of the business, you now own 6.6% of the business, right? 6.7% of the business. So you're getting diluted. People don't pay attention to this, but it's things a lot of companies do, especially when they're expensive. They issue a lot of shares to get the cash instead of taking on debt. So you have to watch for these things. If a company triples its sales and profit, but they also triple the number of shares outstanding, you've got no benefit.
There's
from
nothing.
It.
Yeah.
No benefit for you on that one. So you have to watch out for that. So far, Tata is not looking good. Balance sheet. $18.2 billion in cash and cash equivalents, 19.2 in current liabilities. Don't have enough cash to pay. Wait a second, we don't even have, this is 2018.
Oh.
That's why.
Oh, okay.
19.7 versus 21.07, still an X. So remember, guys, this is an international company. They don't have the same requirements for reporting quarterly data that we do. So when you're looking at it with your Everything Money software, which you can get here for 80 cents per day, get all the data, get the 8 pillars, get the stock analyzer tool, get the news, get the Discord chat with 3,700 other members who talk about investing day in and day out. This is 80 cents a day. It's a no-brainer. This is going up to $50 a month here soon. Take advantage of this. You'll get all the data, everything. But when we bring in international companies, we're only as good as the data they provide to us. We get a great data feed from a very, very reliable company. Morningstar, we pay multiple six figures for this data every year. Just understand that the data comes in different from international companies because they're more focused in the long run versus a short run like the US stocks are. Cash flow statement, the big mamma jamma. Oh boy, annual. All right. Negative 46 to 1.18 billion, check mark there. But the average is negative. So there is no, guys, there's all X's here except for one.
Yeah.
There's only one check here.
Great cars.
I love the cars.
Looking bad.
It just seems like everybody who buys Land Rover and Jaguar ends up selling them at some point.
It always seems like the projection is this, and then the fall.
So let's compare this. What do you think we compare this to another U.S., like another company, not necessarily a U.S. company, but let's say like a Honda, right?
Yeah.
So let's look at Honda, also international, but let's look them up and see what their numbers look like. All right. So their market cap is 56 billion, PE of 9, profit margin of 5. So pretty much the same as Tata's from the last 12 months. They pay a 3% dividend, though, pays out $1.7 billion per year. Now, for those of you who are new here, don't get sucked into the dividend trap. A lot of companies will pay a dividend to get you excited to buy their stock to drive the price up. But you have to make sure the dividend is supported. How is it supported? Through free cash flow. Companies use their free cash flow, which is cash from operations less their capital expenditures, which we'll go through in a few minutes, and they use that money to pay for dividends. The free cash flow in the last 12 months was $4.7 billion. They paid out $1.7 billion in dividends. Plenty of cash on hand to pay off their dividends. All right. Just like Tata's low ROIC and low return on assets, fine by me.
It could be industry wide.
What's that?
Low return on invested
100%.
capital,
I guarantee that's the case.
Low profit margin, etc.
Okay. So Honda revenue 126 down to 119 X. Okay, now granted, COVID was in this time as well, but COVID's also rebounded since then.
Right.
Net income, 5.59 to 5.96. Check. Barely an increase, but an increase nonetheless. And shares outstanding. Oh, look at this. 1.8 down to 1.73. So far, guys, I like Honda way more than Tata Motors. Already, not just because of the checks. They're seeing progress here. Their reliability is incredible. They have great customer service and support. It seems much better. It's actually selling cheaper on the PE level.
Yeah.
Balance sheet, 68.7 billion versus 51.8. Okay, they can pay all their bills with current cash on hand. Cash flow, let's go 4 quarters. And we have 2.24 to 4.72, check, with 3.14 average times 20 equals 62 billion, and that's also a check. Is this all but one check? So guys, look at the software here.
Yeah, throw the 8 pillars up there. All but 2 checks.
Sorry.
Oh, profit
2
margin,
checks.
of course.
Revenue and profit. Yeah, so guys, this is pretty solid. I mean, if you're gonna buy a car company.
You know, I think thinking back to right when COVID was happening, I think we were looking at Honda.
Were we?
I think so. It was very loosely, but I think we were looking at it.
Well, let's put it in our stock analyzer tool. And guys, the stock analyzer tool is great. What it allows you to do is put your assumptions into this tool we created, and it'll spit out what you should pay for the company. Does this mean follow to the T? Yes and no. It depends how much due diligence you've done. If you've done a lot of research and your assumptions are very fine-tuned, great.
Yeah.
If you haven't, it's a great way to see, hey, is this thing selling? You put your general assumptions in that are reasonable. Yeah. Oh, is it selling low? Is it selling high? If it's selling so high, like let's say, for example, Honda right now is at what per share? $32. Let's say it has the stock worth $10. Well, you're gonna sit there and say, I'm not even gonna waste my time. But if it's around 30 or higher, maybe, okay, then maybe I'll look at this. So let's do our assumptions here. You can do low, middle, and high, revenue growth. Let's do 0, 2, and 4% revenue growth. Share change. Now, guys, share change and desired return, you want to start higher and go lower for your assumptions because the higher the number, the worse it affects the stock. So that's why you're being conservative. So 0, negative 0.5, negative 1. Profit margin, 4, 4.5, and 5. Free cash flow as a percentage of revenue. 1, 3, 1, 1.5, 1, 2, time out, 1, 3, and 5. PE, let's go 10,
Yeah.
12.5 and 15. And the reason being, it's a very low return on invested capital. So I want to make sure I pay a little bit of a discount to this company for that reason. They're not reinvesting their money at a high rate of return.
Especially because they're so big also.
Correct. I'm going to do the same thing for their price to free cash flow. And for desired return, the higher the desired return, the less you'll pay for the stock. That's why we put the low assumption to be a high rate of return. And by the way, when you have our software, this video right here will teach you all you need to know about the stock analyzer tool. We hit the analyze button. We go down below. Okay.
What do we got?
We've got pretty much split a low of $5 a share, a high of $58 a share.
Okay.
Okay, but a lot of the numbers are coming in here.
Yeah, what's that middle one?
So 23 to 35. So does it seem expensive? You know, I don't know if it seems expensive. I mean, because here's the deal. The revenue growth has really been hit in the last year because of COVID, I think.
So I guess something I would want to look into is we know that all of these car companies are facing the same chip shortages as everybody else. So maybe that's still more reason that, I mean, you can look at that and say maybe there's a buildup happening and eventually it's going to go back to normal.
Now, at the same point, though, the counter argument I'd make is the economy is doing very well. But our goal as value investors is to sit there and say we want to buy good companies and not guess where they are in the cycle, right? A good company, even with cyclical ups and downs, will still do well over long periods of time.
Right.
If you look at this company here, Honda, look at their income statement over the last 10 years. They've made money every single year. That's very rare for a car company.
Yeah, it is.
Look at that. Every single year they've made money. Every single year.
This is actually something that I want to dig into the 10K on.
You will?
Yeah. This
Okay.
one seems interesting.
Great. So I look at this going, hey, I don't think at 32 it's a bad buy. I think you might be able to make your 10% return on your money. Don't go do more due diligence and make sure, because I do like the fact that revenue is down a lot in the last year relative to the previous year. Right. So I think Honda is definitely a better buy than Tata. I know Tata is excited because it's got Jaguar, it's got Land Rover, very sexy brands. But guys, at the end of the day, it's kind of like buying a sexy piece of real estate. You tend to pay too much. You tend to not get the return for it. All right, guys. So before we go to Mo, he's going to show you the charts on Tata and Honda. I want to show you a little bit more about the software here. You have here news. You click on Honda, you go to news. It's going to give you a news feed on Honda, right? This is great for everything. We're making it better. You're going to be able to comment on the news, have conversations about it, etc. But just in general, our Everything Money software, 8 pillars, retirement calculator. You can sit there and put everything in here. Tells you if you have enough to retire. 8-pillar portfolio. What this does is you put in up to 50 stocks into your portfolio, and it'll tell you as a whole, are they 8 pillars or not? It's a good way to just get a feel for where your portfolio is in general. And then obviously the stock analyzer tool. Again, guys, go sign up. It's only 80 cents a day. It's only going up from here. It's a no-brainer on the value front. This will be the site you go to for all your financial news, analysis, research. Oh, and also, if you want to we talk about the 10K. Right here at the bottom, annual reports opens up the SEC website to the company, and then you sit there and just go right to the 10K right when you find it. Done. Easy peasy lemon squeezy. That's it. We make this as easy as possible for you. We take the work out of this for you so you can concentrate on doing what's best, which is do your research.
And what's really exciting is that by the time this video airs, the mobile app's going to be out.
Oh, yeah. We're announcing that today. Nobody knows this.
Yeah, iOS and Android.
And there's a mobile app. You'll be able to do it on your phone, get all the functionality here just on your phone.
Patreon.com/everythingmoney.
Yep. All right, Mo.
All right. So what's interesting about these is you can see that there's gaps all over the place. And that's just the way that these foreign companies, it gets translated in our markets. And that's why you see these gaps. So this isn't actually gaps. It's just how it gets translated. But this is a good example of showing you guys how we can trade just based on trend and just almost eliminate these candlesticks. This is great practice for you of how to just trust your trend. This is your trend. It's moving down right now. That's very obvious. But instead of watching the day-to-day candles going up, down, up, down, up, down, look at it. Maybe put a paper trade in. Pick the price and then trust your trend all the way down to the bottom. Once it gets into the oversold region, follow it back up. This is a great way to paper trade and learn how to trust your trend. But as you can see, it's just been consolidating in this basically $24 to $21 range for 6 months now. So Tata doesn't really look like it's doing much, but I would ask that you go and try to do the paper trading because I think that's a great idea. Honda kind of looks like a similar chart. You have the gaps, a little bit less gaps, but the gaps are still there, and you're waiting for that trend to switch on you. So right now, why don't you guys throw this on paper, put Honda on their HMC, and just wait until the trend switches, go ahead and paper trade it, see which direction it goes in, ignore the candles, and really get yourself comfortable with trusting your trend. It's very, very important to trust your trend.
Great. All right, guys. Well, thanks for watching this. A lot more videos coming up. You see we have 750 or more videos. Subscribe, do everything you want to do. Enjoy. Value investing is fun.